Christina Sison with Sison Homes. Welcome to the Sison Homes podcast, real estate for all seasons. I'd like to also, with me, joining me is Joy and Marielle.
Hi.
Yeah, today we're going to invite somebody that has been a friend with Sison Homes for a long time. And he's a real estate attorney, and I'd like to welcome Lawrence Tucker.
Thanks, Christina. Thanks, ladies. It's a pleasure to be here with you. As you said, we've known each other a long time. We've worked together a long time, and what a fabulous relationship. Working with a real estate attorney in the Washington metropolitan area is a little different than, say, New York or California, where you generally hire an individual attorney to assist you in the process. In the Washington area, D.C., Maryland, Virginia, the attorney usually works with you through the title company. So I have title company affiliations. What I do is work mostly for an individual title company, but we can be hired outside of that. And it's important as a buyer or a seller to have an attorney to help you understand the process. There are a lot of things that get overlooked in the process, and the attorney gives you a separate set of eyes, someone experienced, someone who knows to look out for issues. Buying a home is such a large commitment for individuals. It's such an emotional process that oftentimes the little details get overlooked, and those details can be as small as how my name is spelled on the deed to if they've got what's called the tenancy correct, and we can talk about that in a second. I've often seen husband and wife listed as mother and son, or somebody's name spelled wrong, and how they how they hold title. These are all processes that need to be discussed and determined, and they're often not. And one of the reasons they're not is when you buy a home in the Washington metropolitan area, or really anywhere, you're the grantee on the transaction, meaning the home is granted to you by the seller. Because you're the grantee, you don't sign what's called the warranty deed. The problem with that is often you're not shown the warranty deed by the title company, and they could have your name spelled incorrectly, or they could have your tenancy incorrect. Tenancy is a very important thing that's often overlooked in a transaction. Generally, two people buying a property can hold tenancy one of three ways. If they're a married couple, they can be what's called tenants by the entirety. If they're a non-married couple, they can hold it as joint tenants or tenants in common. The distinctions are not so complex, but they're important to understand. If you hold a property as a joint tenant or by entirety, you have a common law right of survivorship. That survivorship right is critical. If your spouse becomes bereaved, the property passes to you by operation in law. In Virginia, property drops like a rock. It's a weird term, but what that means is if your joint partner is deceased, you don't have to do anything to change your deed. It's automatically vested in you now as the sole title holder, which means you don't have to go through the messy process of probate. You don't have to worry if they die testate with a will. That tenancy, that survivorship right is critical for joint owners because of the property passing by operation of law. Again, it's something that should be in your deed, but because you're the grantee and you often don't sign the deed, you never sign the deed, you often don't see the deed, you might not know not to look for it, and it might not have been explained to you. So this is why it's important to have a second set of eyes. First-time home buyers are so overwhelmed with the process, from the move to the commitment of buying to, we're going to change the wallpaper, which bedroom does my daughter want? That they don't, the minutia is overlooked. And the minutia could be critical in a transaction. One of the minutia that's not properly explained to buyers is the importance of title insurance.
Yes.
Often people say at the closing, oh, I just spent so much money. Why am I buying title insurance? Well, the reason you're buying title insurance is, first and foremost, your lender is going to require title insurance. Whenever you get a loan, it's a federal requirement that your lender has title insurance. Think about this for a second. If your lender thinks it's important that they have title insurance, you should think it's important. Additionally, Virginia is what's called a simultaneous issue state. Again, if you don't have representation, you don't have an attorney, they might not have explained that to you. But in Virginia, when you're buying a property and the title insurance is simultaneously issued, basically you're just paying for the owner's coverage plus $150 for the lenders. So let's explain to you the importance of having it. First of all, in today's interest rate environments where interest rates have gone up 170% in the last 7 months, if you're buying now, congratulations on your buy, but you're probably going to be refinancing just because you've caught the wrong end of the rate cycle. In the next 2 years, rates should go down. The good news is when you get an owner's policy, you get 30% off your next lender's policy. Again, no one's ever told you that because they're not looking out for you. But that owner's title insurance,
10 years, good for 10 years, right?
Good for 10 years. That's the seasoning requirement. Correct, Christina. It means as long as you've bought that in the last 10 years and you're sent it by your title company, you can present it to your new title company, because when you refinance, even though you had a lender's policy for your purchase loan, you're going to need a new lender's policy for your refinance. That 30% saving is going to pay for your owner's policy. But what else does your owner's policy do? It protects you against all sorts of things, such as fraud.
Mortgage fraud, right?
Right, mortgage fraud, grantor fraud. If somebody shows up to sign the deed, that's not the person who owns it. If there's a will issue because you have a decedent, and if there's a bankruptcy issue. But the biggest issue in the thing is what's called unreleased deeds of trust. Again, you never know about this issue until it bites you in the ass. Excuse my French. But so what happens is you buy a house. Christina sold you the house. The title company pays off her loan, and her lender fails to file the release, what's called the certificate of satisfaction. If that lender goes out of business, or Christina moves away, or dies, or something like that, how do you get that released? If you don't have an owner's policy, you don't have any recourse. You have what's called an unrecorded deed of trust, or a UDOT. That UDOT can prevent you from selling, or it can prevent you from refinancing. And with the way rates have been moving in the last 6 months, if it takes you 60 or 90 days to clear that issue because you didn't have an owner's policy,
You might lose the rate.
you might lose the rate. That's right. So that owner's policy pays for itself. And it's a little bit of protection, and it protects you from the day you buy all the way up through your sale. It's not like your car insurance or your health insurance that you're rebuying every year.
Lifetime.
That's it. And for the first 10 years, it gives you a discount on your lender's policy. So it's a very important document. It's very important to have, and it's a little peace of mind. And again, as you grow in the house, your equity grows. This protects your equity. It's more important than the new shades in your dining room or something like that. And again, people, when they buy a house, they make monetary choices. You have to. The thing we hear all the time as title attorneys is, oh, I can afford the payment. That means I can afford the house. That's not it. I mean, people should know that the payment is 20 to 30% of really what they're spending on a house. You better be able to greatly afford the payment, and you better understand that once you're buying a house, that's the least of your payments. You know, you've got every repair, you've got every utility bill, you've got tax bills, you've got HOA, condo bills, whatever the case might be. But again, I get people start making financial choices, but it's a bad decision, especially because Virginia discounts the combined policy so much to waive your owner's policy. It just gives you peace of mind that somebody else is looking out for you. And generally, those somebody else's are Fortune 500 companies. Most of the title underwriters are publicly traded companies. That means they stand in your stead. If there's fraud in the file, if there is something happens, if someone's died and it's not reported, they're going to pay for the litigation. They're going to pay to get that corrected. Again, one of the reasons people don't hire people like myself as an attorney is we're expensive. We're expensive. But if you don't want to pay future legal bills, buy your owner's title policy. It's cheaper than our fees.
Thanks, Lawrence. That's a very, very good sort of like you seeing the benefits of owning title insurance. But yeah, so tell us more about like us, our audience are first time home buyers mostly, and tell us more about like what they need to watch out for. Yeah.
Okay, so obviously there's a lot of things they need to watch out for, but having come to you all, they've handled the first part.
Yeah.
Most buyers, the biggest mistake they make is not employing professionals. Yeah. And obviously, if they found you, they found some of the best professionals in the business. And what buyers, especially first-time home buyers, must realize is most of the money you guys are making in the transaction, they're not even paying. So they're getting outstanding professional representation essentially for free. You know, the seller's paying your fees. They might pay a small admin fee, but again, that barely covers your mileage or whatever. And again, they can hire the best of the best on somebody else's dime. And so it's imperative that they don't go at it alone. This is the biggest financial choice that most people make in a lifetime. And it's something that they better be committed to for a number of years. If you're not going to stay in your property for at least 4 years, you're going to lose money because of the transactional cost of getting in and out of a property. So the number one rule of real estate is you make money on your buy. So they got to make sure they're buying at the right price. That's why they're hiring professionals like you to do a full due diligence, to do a full BPO, to tell them what price they're to buy at, to help them negotiate the contract. Hey, if the property is going to appraise for $775, but you also know the buyer's willing to take $760, that $15,000 might be better for them as a closing cost credit. Yes. Again, but unless they work with professionals like you who know the lenders, know the title companies, know the home inspectors, know the pest inspectors, they're not getting the best service. So the first mistake they make is thinking, oh, we're going to find the property ourselves on the internet. We're going to do everything. We're going to find the property. We're going to find the agent. We're going to find the lender. We're going to go to somebody discounted because we're more worried about some fee they're going to give us back than quality service. Right. This is a huge financial this is
decision,
and commitment. And it's a multi-year commitment for people, so they have to be prepared to cover it, but the way they're best covered is by hiring people who have their best interest in heart. So shortcutting a home buying process is a mistake. 6-8 months ago when the market was crazy, boy, we forget those times in 8 months, but when the market was crazy, people were waiving inspections to get into houses. And while that might have been necessary to get the contract, at minimum an inspection should have been done for informational purposes. Only, So, but again, had they had you as an agent, you would have advised them on that. You would have gotten a good home inspector, and at least they could see the defects of a home before they're entering it. Because guess what? The day they sign the paperwork, those expenses are theirs. Those expenses are theirs. And unless it's a latent defect that was undisclosed, and those are hard things to litigate, believe me, I've been there. Those are hard things to litigate. That's a cost for them. And that's why a home's always more expensive than the mortgage, and that's always why they should have seasoned professionals. And I think in this difficult market, with interest rates going up and down, with pricing probably not as low as it should be, with negotiations being tougher, a seasoned professional is even more important. And you all, with 90+% of your business being from referral, it's clear that your clients trust you and they trust their friends with you by referring them to you. And that's what I think home buyers should focus on. They should find not just the right personality fit, but someone who's going to protect their best interest. Because
Get your back.
ultimately, they've got to sleep in this property for a number of years, and this has to work for them. Yeah. And so by having people who have your back, who know the market, who know the professionals in the market, that's always in your best interest.
Oh, that's great. Well, I guess my question is, like you mentioned earlier, you should get there's a heavy focus on finding and purchasing good title insurance. Are there certain things that you should look out for when comparing like title companies?
Well, again, everything's relationship based, and you should have a title company that knows what they're doing, has been doing it for a while, going to look out, going to closely examine title, you want what's called freely marketable title, not just insurable title. And the difference is you don't want to have a problem when you sell. Yep. You don't want defects to be covered over. So
so I remember we have a case like that, right?
That's right. That's right.
Yeah.
And so sometimes people, to get to the finish line, will take a shortcut. Look, there's a lot of anxiety being a home buyer. You want to close on time. Most of them are writing their biggest check of their life. They're making the biggest financial commitment of their life. You hate to be the one to tell the home buyer, we've got a problem, we've got to slow down, we've got to walk before we run, because we don't want this problem just to surface. We don't want this problem to surface when you sell. And one, that's the importance of getting title insurance so the problem doesn't surface when they sell. And number two, it's the importance of resolving all the issues now. Yeah. When your seller sells, they're done. Once they get their money, they're done. They don't want you to come back to them in 6 months and you don't know where they're going to be. If their lender failed to release a doc, if they missed a signature, if something. So as hastily as people want to get to closing once they write a contract, the important thing is to have process and to do everything by process and to get it done right the first time, but without putting the cart before the horse. And again, we all want to get to closing, but we want to make sure that they're protected. Look, the best news about working with a buyer is hopefully they never have to call you again because you've done everything correctly, right?
Or they call you if they want to have dinner or something.
Yes, exactly. Or they call you if they want to buy their next home. Yeah. But again, you only have one chance to make a good first impression, and so our goal is to do everything right the first time. And even if that means, I'm sorry, we can't close Thursday with you, because the sellers still failed to get the HOA docs, the sellers still failed to get the previous deed of trust release because they never bought an owner's policy. Yep. It happens, doesn't happen often, but what we'd like to make sure is that we get it right the first time for your buyers.
I don't want to divert the topic, but I want to ask this question because I think this is very important for our listeners out there. We're discussing about, you explained during settlement about, payments, 30-year payments, and all of these procedures. What do you think would be, for extra payment that can cut short their loan balance? Can you tell us more about that?
Yeah, absolutely. So the old adage, or what you used to hear on the radio, the Rick Edelmans of the world, would say, get the largest mortgage you can and just hold on to that because of the tax deductibility and you can use your money better elsewhere. I completely disagree, and especially in a rising interest rate environment. Right now, the mortgages, unfortunately, we're closing are about 7.25% on a 30-year fixed. Yeah. You cannot get risk-free money for 7.25% anywhere. The banks don't pay it even on a 20-year CD. If your checking account pays any interest, it's 0.25% or 0.5%.
3% now.
Yeah, well, 3%. But again, you're not getting that 7.25% anywhere. So my thought is always pay yourself first. And hear me out through this. On most conventional mortgages under $500,000, if you make 3 additional principal payments a year, you cut your mortgage in half.
Wow.
And so let me explain the mechanics of that for a second. Number one, again, people will say, but my tax deduction. Your tax deduction on your income taxes on your Schedule A, once you itemize your deductions, once you buy a house, if you do itemize your deductions, because again, they've been increasing the standard deduction, so not everybody even itemizes, even some homeowners. But if you do itemize your deductions, what you're deducting is your deductible interest. So what I'm telling you is prepay principal that has no effect on your deductible interest. In other words, if you prepay principal and you cut 10 or 15 years off your mortgage, for the 15 or 20 years that you maintain a mortgage, you still have your full tax deduction. Number one.
Oh my goodness, that's very
Number
good.
one. Number two, there's no penalty for prepaying your principal. Number three, in today's higher interest rate environment, let's again say 7.25 on a conforming loan, your first 4 or 5 years, your principal payment is about $280 to $400 a month. That's it. So if we're talking 3 additional principal payments a year, we're only talking about an extra $100 a month, right? So if your payment, including your escrows, and escrows for people who don't know are generally your property taxes and your homeowner's insurance, the lender will never escrow your condo fees or your HOA fees. They can't by law. So the escrow is only your homeowner's insurance or your real property taxes. So if your payment, including your escrows, is $3,200 a month, and it's only additional $100 a month to cut that payment in half, well, it certainly makes affording college for your children or your retirement or your vacation home that much easier. You're not reducing your tax deduction. You're paying yourself first. And if you look at what's called your finance charges, most times when you have about a $300,000 or $400,000 loan at 7%, your finance charges are almost $600,000. That's the normalized interest you would pay your lender. So if for $15,000, $30,000, whatever the case might be, over 15 years, you're saving $300,000. That's a pretty good raise that your employer is not giving you, right?
That's
And,
amazing. These are like secrets from this tax attorney here.
Right, and you're not,
secret.
and you're not reducing your tax deduction, right? You're just, and even better, after 2019, the law changed, so you no longer have to indicate on your payment coupon or on your online payment to apply the additional money to principal.
It's an automatic.
Automatic, must go there by law. So as long as you don't owe them any back money, just do it. And the best news is, again, let's say your payment is $3,230 and you're going to bring it up to $3,400. You're going to pay that extra $170, so you have an extra $2,000 a year, which is your 3 payments. If you got in trouble, if you needed that extra $170 and you had to pay that $3,230 again, no problem. You can do that. There's no penalty for that. You can go back to your normal payments. Even so much as splitting your $3,230 to whatever it is, $1,615, and doing bi-monthly payments pays 1 additional payment a year. Under the theory that 3 additional payments a year cut your note in half, 1 additional cuts off 7 or 8 years. And you're paying the same amount. You're just paying it bi-monthly, which for most people's paycheck works out well.
Yeah.
So again, these are all options. But to that end, when you buy a property, your information becomes public. It's called the Freedom of Information Act, FOIA. So you'll start getting stuff in the mail like, hey, for $95, I can send you your deed.
Don't believe that.
Right? It's not that don't believe that.
It's free.
It's free. Why pay someone $95? Your title company should have sent it to you, because they're the ones who did the recording, and they should send it to you with your owner's title insurance policy. But then there are going to be people like, for $400, we could set up bi-monthly payment. Again, you can do that free through your lender.
Yeah.
So don't spend your money paying extra principal.
Yeah,
Don't spend your money having people do things for you that you can do yourself.
Oh,
That's
that's
good
so
to know.
great.
I
That's so
know.
great. So this is like, I think this is why this podcast is really, really important. Like imparting this knowledge to people who are thinking of buying a house, and they wouldn't really get this knowledge elsewhere, because this is like sort of like first-hand experiences. You know what I mean?
Absolutely. And again, just a little bit goes a long way, especially in paying down your mortgage. Most of your first-time home buyers, eventually will probably think about paying for college, if not private school for their kids. Having to do that and pay a mortgage is a big challenge. A big
Absolutely.
challenge. Had they known that for as little as a couple extra $100 a month, they could have cut their
pay off
mortgage in half.
Then
You
set
know-
that off for college anyway.
Yeah.
So
Instead of that extra Starbucks or whatever, that's
Oh,
it.
no.
That's it. Mortgage is
Yeah.
done.
Yeah.
Mortgage is done. And again, it's not reducing their tax deduction, which is the reason most of their parents or their CPA or their financial advisor has told them to buy a house, because all of a sudden they want to get that
The big
itemized
tax
deduction. It's not decreasing their deduction. It's just decreasing the amount of time they're getting the deduction. But that's a good thing. They're not getting the deduction because they don't have the debt anymore. It gives them financial freedom. They can buy the retirement home. They can pay the $70,000 for their kid to go to undergrad. That's per year, by the way.
and you should know.
Well, I should know. So again, it's just paying themselves a little bit extra first, much like the owner's title policy. Getting that owner's title policy for a couple $100 more than their federally required lender's policy is going to enable them to get a discount if they refinance. So let's talk about that for a second. People say, well, you're telling me to prepay my mortgage. What if I refinance? Or what if I sell? Well, you're going to eventually do one of them
the
anyway.
other,
It just means your payoff's lower because you've paid paid additional principal. If you borrowed $300 but you've paid so much principal you owe $200, you get more money back in your pocket.
Yeah, DMV is such a sort of like transient city. Every 7 to 10 years, people sell.
That's it.
and move,
Yeah,
you know,
yeah.
So
5 years even. So
Yeah.
again, people are going to sell or refinance, but they're not disadvantaging themselves by having prepaid principal. All they're doing is meaning they're getting more cash back in their pocket. And again, that doesn't affect their capital gains on the sale. Remember, capital gains is the difference between the adjusted sales basis and the adjusted purchase basis. Has nothing to do with their mortgage. Some
nothing
people
to
buy.
do with their mortgage,
That's
yeah.
right. Some people buy cash. So again, paying a little extra toward themselves each month goes a long, long way. Reduces their debt burden, increases their flexibility, and helps them. And again, I think one of the benefits of not only working with professionals like yourselves and the professional lenders that you have that can show them, like, hey, here's your normal what's called amortization schedule. It's usually 12 pages because it's 360 payments, and you look at this and you cry because you realize till 72 you're going to
So
be
I have
paying
to pay,
this,
yeah.
right? And but then you could say, hey, run me one where I am making an additional payment or two, and then you really see the benefit of it, and you really see that that's your money working harder for you. And I think that's the key. Whenever you buy a house, you have unexpected costs. You're in there 2 months and the dishwasher goes, or a tree falls on you, or whatever. You want to do
homework, yeah.
lawn work or whatever. You didn't realize that you have to pay your portion of the shoveling or whatever.
The
So-
fence, yeah.
yeah, something. The day after your 1 year warranty on this, then the item
Everything
goes
breaks down.
right. So
Of course.
they're just unforeseen expenses, and I always think it's best, especially with the prepayment idea, is when you get your a mortgage number, it's generally a relatively obtuse number. It's like 286347, right? Like, can't you just round that up to 3,000, right? And it's
then
probably
stay
an
up to
easier
6,000.
payment. And
Yeah, you know
if
what,
you
you're
start from day one, you'll never regret it, and you'll never miss that extra money. If I had $1 for every one of Christina's clients or somebody else's clients who said to me, I'm going to do that when I get my tax refund, I'm going to do that when I get my bonus.
You never do.
Never do. But if they do it from day one, that's what they think their payment is. And we're not talking about significant amounts. And to me, it's easier for balancing a checkbook or whatever to have that linear payment at 3,000 than 28 something something something. You know, it's just an easier calculation. And so again, there are little tips, there are little tricks, there are little benefits to having professionals that can make the whole experience that much smoother. And it's not just the experience, it's the long term.
This is a long-term, relationships that we want to establish, especially for clients going back to you and, hey, Christina, we're gonna buy, we're gonna upgrade, and then eventually we're gonna buy a building, we're gonna invest.
That's right.
Like we have that relationship
That's
because
right.
they trust you.
And by looking at the complete picture and by helping them not just in the
In the home
acquisition
purchase.
process, but thinking through the whole period of ownership. Like, hey, if you have to refinance in 5 years, if you're gonna step up in 7 to 10 years, by doing these little things, you're gonna have more money for your next purchase, or for when your kid goes to college, or for when you have to help your mom with her medical bills, or whatever the case might be. It's that ability to look at the big picture and see it as a relationship, not a transaction.
It's sort of like a sense of purpose that you're really, really giving something of value to your clients.
Absolutely, and I think that's it. I think the value equation, the ability to impact their lives,
Yes.
not just through helping them acquire their dream home, but putting them on as firm a financial footing and peace of mind. There's always insecurities when you buy. There's not a client out there, especially a first-time home buyer, whose mother or father is not going to think they're getting into too much, or their mother's not going to cry like, oh my God, you sure you can do this? But again, by having your team as their team, by knowing you're looking out for more than just the transaction, but for their livelihood, you've added benefit. And I think that's obviously one reason that you guys have been doing it for so long, is the ability to impact people's lives and to add benefit. And the reason that we exist and the things that we think we can help on is, again, there's so much minutia in a transaction, but it's the minutia that gets overlooked. And it's what can really trip you up. It's, nobody ever thinks about the deed of trust not released from their title until 7 to 10 years later when they go to refinance it or sell it, and it appears. By having,
That's why it's very important to have title companies that are credible.
That's right.
Because
and it's such an issue that there's now a cottage, somewhat of a scam industry called Title Lock that's doing infomercials with William Shatner. I mean, guys still need some money. And he's saying, we're 24 hours a day monitoring your title and blah, 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 blah for this amount a month. And, we're going to do this, we're going to do that. And again, you don't need paid scammers. You don't need someone to help you get your deed. You don't need someone to constantly evaluate your title. What you need is a professional to do it right the first time, not to be penny wise and pound foolish by waiving an inspection, by waiving owner's title, by, getting the best mortgage you can, to paying yourself a little extra from the beginning. Do the little things. And
that's
then
why you pay the professional the first time.
The first
right?
time. And once you do that, you don't need the scam cottage industries because you have peace of mind. I mean, William Shatner on their TV at 2 a.m. telling you that he's 24 hours a day monitoring your title. Can't believe it. This is where we've gone as an industry. But again, it's imperative that by having a team, by having a set of professionals, you know you're getting the best quality service. And that hopefully is only the service you do once until you upgrade. And you know when you upgrade, the process will be smooth.
And then they can call you again.
Yep.
Yeah. Wow, that's a lot of information. Yeah.
That's
Very
it.
critical, important information in the home buying process.
Mm-hmm.
Yeah. So, Lawrence, thank you so much.
My pleasure. Always thrilled to be here with you today.
Learned
And
so much today.
Any last piece of advice? Of course, we're gonna have him again. It's just any.
again, the best thing you can do as a home buyer is work with a professional. I know the internet and your phone and the ability to put yourself in control gives you a sense of empowerment. That's a false sense of empowerment. If you're a novice, get help. Again, 99.9% of the money they're making, you're not even paying. The seller's paying. So you're getting the best quality help for almost free. And you're going to rely on them to do things that you don't know. Point you in the direction of the correct lender. Hire the correct home inspector. Hire the correct title company. Hire the correct termite inspector. All these things. By having one professional or one team of professionals, again, make your process easier. Second piece of advice, you're your best ally in this. Ask questions. If you don't understand something, slow them
a
down.
question,
Don't be afraid to speak up. If your name's spelled wrong on the contract, it's probably going to be wrong in the deed. Point that out. Ask to see the deed just so they've spelled your name right. Talk to your partner about how you want to hold tenancy.
Yeah.
You know, never add a minor child to a property.
That's another topic. We have that.
Yeah.
Put it in trust.
Yeah, revocable trusts are a great thing for your property, and it's a great way to avoid probate for your surviving spouse. But again, there are all these little things that you need to think about. There are professionals here to help you, and rely on a professional because a little goes a long way.
So, Lawrence, how did they get in touch with you?
So, you know, of course through them, of course through Title One. You can contact Jane Lee at Title One, and she can get you right to me, or through my law firm right there in Tyson's Corner. Tucker Nong and Associates, and Lawrence Tucker, L. Tucker at Tucker Law PLLC, or Christina has my cell phone. Always happy to answer your questions. There's no such thing as a dumb question. You know, there's no such thing as an embarrassing question. Any question you have is something you're considering or something you're worried about. It's better not to have fear through the process. And ask things to be explained to you from your lender, from your realtor. Ask the questions. They're going to ask the questions for you, but ask your questions. Work with them and their lender to decide, do you use the credits to pay your closing costs? Do you use it to buy down your interest rate? What's the best way to use the money available
How to
to
be
you?
creative.
Strategize.
Right. So again, you have a team of professionals. Take advantage of them, and because they're here to make this not a transaction but a lifetime relationship. Relationships are important. Utilize their wealth and knowledge to help you get across the line.
Awesome.
That's it.
Thank you so much,
My
Lawrence.
pleasure.
I appreciate it. So this was another episode of the Season Homes podcast. So stay tuned for the next one, guys. Thank you.
Thank you.